Hi, my name is Miss Joseph, and today we will be going through the CXC O-Level Principles of Accounts Paper 2 for May 2025. On my screen, I have the start of the May-June 2025 Paper 2. This paper consists of 5 questions, 20 marks each, and we know we have 3 hours. So each question should take you approximately 36 minutes to complete for the 20 marks, right? So we're going to look at question 1 in this video. Number 1, part A. Bihari prepared the following statement of account for a credit customer. Complete the statement of account by inserting the missing balances. They would like us to complete the statement of account for one of our credit customers. Credit customer meaning that he is buying goods from us, but he is not paying us immediately. Right? And your statement of account, this item would fall under section 3 of your syllabus, where you deal with source documents. Statement of account basically sums up from the supplier to the customer all the monies that are owed based on invoices and payments, right? One of the things is that you always have to show all workings. What I'll do, I'll show my workings to the bottom of where we have to fill in the answers. The company is owned by, or the business is owned by Bihari in St. Lucia, so we have his business information, the name of the statement of accounts, and then the customer's information. Remember, he is our credit customer, so he will be considered an accounts receivable to us. Then we have the date on top, August the 31st, 2024. So we're going through one by one. At the beginning of August, we had a balance brought down on this accounts receivable, TMOS, of $520, meaning he owed us that money from credit sales. On the 9th of August, there was an invoice to TMOS for $340. So for part 1, we're going to say 520, what he owed us before, plus 340, right? Jump to the calculator. So we have 520 plus 340 equals 860. All right. This would be the accumulation of the money that is owed to us from the customer. August the 13th, we have a credit note. Credit note is another source document. What happens is that when a customer wants to return an item, they return the item with a debit note. When the supplier, who would be us or Bihari, receives those returned goods along with the debit note, we issue a credit note to acknowledge that we will be giving a refund or allowance based on what is returned. In this case, we're going to have to minus. So we're going to say 860 that is owed to us minus the $24 that is going to be considered returns. 60 minus 24, 836. All right, next up, on the 24th of August, there was a check that would be paid to us, which would be Bihari, for $663. What is paid to us, we are going to minus it from what is owed. So we're going to say 836 minus 663. We'll get 173. Again, we want to show all our workings, just in case, let's say we made an error and the examiners want to know how did you arrive at your answer. Right, and the final one on the 24th as well, we had a discount. This will be a discount allowed to our customer. We're gonna take it away because he won't owe us that amount. Let's say 173 minus 17 should give us 156. Just double check on the calculator. 173 minus $17 equals 156. Balance that team is going to have for us will be $156 at the end of August 2024. This is a very easy 2-mark question. You shouldn't take more than 3 minutes on this. And let's move on to part 2 and see what we have. All right. B, they tell you now the opening balances on August the 1st, 2024 were as follows. They give you the cash and they give you bank overdraft. Transactions for the month of August were as follows. Now let's see what they are actually asking us to do in this question. Part 1 of B tells you, use the form provided on page 7 to prepare Bihari's 3-column cash book for the month of August. Balance the cash book and bring down the balances as at September the 1st, 2024. Page 7 would be what I have on the right-hand side of the screen. We are literally going to prepare the 3-column cash book. Let's just put Bihari's name on top. And let's just put cash book here so that we know what we will be looking at. All right, this question is 10 marks, this part of the question. 10 marks should take you approximately 18 minutes, no more than 18. That's the max that you should spend there. Let's start with our opening balances. So let me put my dates in. We have August, we're in 2024. Just drop this on both sides. Right, and the start of the month is going to be August the 1st. So we had a cash balance of $100. Now, cash is an asset, so it naturally will appear on your debit side. I'm gonna say balance brought down. This would be from the previous month, the opening balance of $100 on the cash. For the bank overdraft, the overdraft is when you spend or when you withdraw more than you put into your bank account. This is going to have a negative balance, which will show up on the credit side. I'm going to say August the 1st, balance brought down. Bank was a figure of 8150. Right, and just as a reminder to you all, what I will do is on top, I'll just put credits to represent all the monies coming out or decreasing. And on the left-hand side, I'm going to just remind you that this will be debit side, and this will represent all the monies that are increasing as it relates to the asset of cash and bank in the business. Let me tick off as we go along. We enter the starting balances. Now we're going to go down to the transactions. August the 9th, a check received in July for $462 from AD Supplies was dishonored by the bank. What does this mean for us? What would have happened in July is that AD Supplies would have paid us using that check of $462. So the transaction we would have recorded in July would have been debit the bank, because it's a check for $462, and we would have credited the customer who would have been AD Supplies. This would have been in July. Now, coming down to August, when the bank actually does its checks to see if funds are available in AD Supplies account to pay us his own monies, the bank would have realized that he did not have enough funds in that account. So what happens here is that it is considered a dishonored check. Right? So this can be from insufficient funds in AD's account. This check will be considered one that is going to bounce. So let me say check bounced. That's what you call it when it comes back out of the account. We thought we had the money in the bank, but it turns out it wasn't valid. So we need to now remove that money from our bank account. We're gonna take it out. To remove it, we're gonna credit the bank in that case for the 462. What you're doing here, it's kind of like you're reversing the entry. You're taking the money back out of the bank because it didn't actually settle into the account. So this would be on August the 9th, and my reference is going to be AD supplies. Next up, we have B. Harry, who is the owner of the business, paid $64 by check for gas for his wife's motor vehicle. Not for the business's motor vehicle, but for his wife. This is a personal transaction. Anytime it's coming from the business to the pockets of the owner or for his personal affairs, it's going to be considered drawings. Reduction in the investment within the business. Coming out from the bank, so we're going to credit the bank for $64 on the 18th of August, and my reference is going to be drawings. My debit drawings, credit the bank. Next up, the 24th of August, received a check from T. Moores to settle her debt of $680 less 2.5% discount. You remember, part A, we were actually doing the statements for T. Moores. This 680, when you work out 2.5% discount, it's going to be $17. We are receiving a check, our bank is going to go up, so we will be debiting the bank, referencing the discount amount, and then here, 24th of August, I'm going to say T. Moores. Discount is $17, and 680 minus 17, you should get 663. So this is the amount of money we actually received via check. This is discounts allowed because it's on the debit side, it's an expense to us. Next up, we have the 27th of August, paid $4,000 by check. This included $3,600 for new office equipment and the balance for repairs to an existing piece of office equipment. If everyone remembers how to class their items, when you purchase the fixed assets, it's going to be debit office equipment, credit the bank. Let's enter that part first. Right, just abbreviating office equipment, and we took this out of the bank. It was $3,600 that we used to purchase this, and the remaining money was paid for repairs of existing office equipment. This is going to be classed differently from the fixed asset itself. So what we can do is we can class it as repairs expense. That's $400. Right? Your fixed asset and your expense are two different things. That's why we list them separately. On the 30th, cash sales amounted to $4,224. We are receiving cash from sales. We go into the debit side, cash is going to go up, 4,224. Why is cash going up? Because I made sales. My date is going to be the 30th of August. The last part we have here. On the 31st of August, deposited all cash on hand into the bank except for $500. So in order to work this out, we have to figure out how much cash do we have, and then we're gonna minus 500 from it to figure out how much we keep in as cash, and the remainder is going to go over to the bank. We're gonna say the cash that we got was 100 we started with, and we received 4,224. So what we're gonna have here will be 43.24 minus $500. So we should have 3,824 that we're gonna move over to the bank. All right, and this is a contra entry when you're moving from cash to bank. So cash is gonna go down. So I'm gonna come over here and I'm gonna say 3,824. It's going down. Why is it going down? Because we're moving it to the bank on the 31st. And on the debit side, the bank account is going to go up by 3,824. Why is it going up? Because we took that money from cash on the 31st. All right, so these are all the transactions entered, and now we need to actually balance off the account. Let me draw my double lines to show that I am summing it up, balancing at the end of the month. All right, so let's just close off that discounts columns first. So discounts allowed, it totaled up to $17 for discounts allowed, and discounts received, we had 0, so I'll just drop a 0 into this column. Next up, it's going to be easier to balance the cash because I already know the greater total, which is 4324, 4324. And then to find the difference, so these two, debit side adds up to this, but we need to figure out how much is the difference here, and we already worked it out, and we already know that the difference is $500. Right, that difference figure, we call it the balance carried down, and it's going to be on the last day of the month, and then you're going to bring that balance over into the new month, which would be September the 1st, and we call it the balance brought down. All right, make sure you put it back into your cash column. So we're starting September with $500 in cash. All right, next up, let's balance the bank. So what we need to do is we need to add up the debit side, add up the credit side, and figure out which side is greater. So the greater side looks like it's going to be the credit side. Let me use my calculator to work this out. I don't have that on the screen right now. So I'm saying 8150 plus 462 plus 64 plus 3600 plus 400 is equal to 12,676. So this is going to be the total on both sides to balance it off. And again, we already know all of these add up to this. So what you need to do is on the lesser side, which is the debit side, you need to find a difference. How much are we missing to make that figure? So we're going to say on the calculator, 12,676 minus 3824 minus 663. We will get a figure of $8,189. This figure here is going to be called your balance carried down on the last day of the month. And then you're going to bring it down diagonally into the new month. So we're going to say September the 1st on the credit side. Balance brought down. Make sure it's in the correct column, the bank column. $8,189. Right. And this is our balanced 3-column cash book. That was the 10 marks. And then for 1 mark, they are asking you, state one significance of the balance on the bank accounts in the above at the end of the month. The significance of the balance that is brought down. Notice this balance is on the credit side, and we spoke about that at the start of the question. The balance brought down on the credit side of the bank account will represent a negative bank balance, a bank overdraft of, and I'm going to be specific, I'm going to say $8,189 at the beginning of September 2024, right? And this is because we withdrew more money than we deposited into our bank account. That is part B of our question. Let's go on to the next part. Part C. Timors learned through social media that there is a system that makes payment by electronic means. Recommend 2 electronic means that Timors could use to pay for the goods purchased from Bihari. When we say electronic means, it's something that is taking place not physically, but basically over the internet per se. So you have point of sale system, abbreviated as POS. Bihari can actually allow Timors to come into the store, or whenever he comes into the store next, he can use the point of sale system, which it's like a links machine where you can swipe your debit or credit card to make the payments. Right? And then the funds are transferred electronically from your debit or credit card, whatever bank you are banking with, into his bank. One, you have the point of sale system. Number 2, we could say online bank transfer, or you could also say mobile banking transfer. So this is where Timors can use his phone or computer, log into his bank account, and then he can use the bank information that Bihari gave to him to transfer the money without having to physically hand him cash or a check. Those are 2 answers you can have. In addition to this, you could say something like payment through Bihari's website, if he has that option available. A lot of y'all will be familiar with this because you can make payments online like that when you're purchasing, right? Okay, so that's part C. And then we're going to part D now. So that was 2 marks. Part D, they tell you, use information from the statement of account on page 5, that'll be here, and the cash book on page 7, which we just completed, to prepare the account for Timors in Bihari's books. Be sure to use the correct account titles in the details. Also, balance and rule the accounts at the end of the month. This is basically us doing up a T account for our accounts receivable from the perspective of Bihari. Accounts receivable, we know that this type of item or this type of account is considered an asset. When we debit this account, it means that we, being from the perspective of Bihari, will be saying that more money is owed to us. And if we were to credit the account, it would mean that less money is owed to us. So we will receive less in the future. Let's go. We're starting with August the 1st balance brought down. So we're going to enter this directly as is. And because this type of account is an asset, the balance will naturally show up on the debit side. It's in the year 2024, August 1st. This is the balance brought down. That would be the balance brought down from July. 520. Right, so right now he's owing us $520 at the start of August. What happened next? Invoice. We would have issued him an invoice because he purchased goods from us on credit. So we had credit sales. the amount of money that he owes to us will increase. 9th of August, sales, and the figure of 340. Let me tick off as we go along. So we have this, we have this. Next up, we have the credit note. Remember, we, the supplier, will issue the credit note when we receive goods that are returned to us to acknowledge that we will be giving a refund or allowance for the goods that are returned. So less money is going to be owed to us. I'm going over to the credit side. This was on the 13th. And you see how they say be sure to use the correct account titles. What we would be referring to here will be our return. It's going to be coming back into us. So return inwards. Turn inwards of $24. He will owe us $24 less because he returned goods into our business. Next up, we have the check that was paid to us on the 24th of August. So let's just put the date, 24th. If he pays us, he will owe us less money. So the amount owed to us will go down by $663. Why? Because he paid us. Whenever you see check, you record it as bank. Nice and easy. Then the last one here, we have the discount. This will be a discount that we are allowing to our customer. It means that he's going to owe us $17 less. Same date, just put it in, and then you see discounts allowed. Okay, so that's all the transactions from the statement of account. And let's just go down to the cash book and make sure we didn't forget anything as they referenced the cash book as well. If you notice, we have this on the 24th, where we said received a check from T. Morse to settle her debt of $680 less the 2.5% discount. And if you remember, when we worked it out, it actually turned out to be these two figures here. So this is already entered, and that is the only thing relating to T. Morse that we would have had to record in there. So let's balance off this T account. Same process. Put the line to show we summing up. Then the double underline to show we closing off with that balance. All right, so now we have to add up and see which side is the greater side. When I add the debit side, 520 plus 340, I should get 860. I'm just gonna write it on top here. I'll erase it after. And then when I add my credit side, 24 plus 663 plus 17, I'll get $704. Again, just writing it there. If this were your exam, you could write it in pencil and then erase it after. The greater total is going to be 860. So 520 plus 340 is 860. I'm going to put that on the both sides in line horizontally with the double line underneath. Now, these three add up to 704. So what we need to do is we need to find the difference to figure out what it's going to take to make up 860. So we're going to say 860 minus 704 equals 156. And this difference figure represents the balance that you're going to carry down into the new month. So this will be on the last day of August, the 31st. Then you're going to bring it down September 1st. Balance brought down 156. Now, they didn't ask you this, but what is the significance of that $156 at the start of September? It means that based on all the sales to T. Morse and the payments that he made to us, the remaining balance that he has owing to us is $156. Right, and this figure will match part A of the question, your statement of account. It will be the same figure if you check it back. And this one was 5 marks, so approximately 9 minutes on this, 9 minutes max, enough time to check over, etc. That's it for your question 1. Look out for the other videos if you're looking for the other questions for this paper 2 for May 2025 PoA CXC exam.